Hi and welcome to Carnegie and our interview with Fingerprint Cards. My name is Markus Almerud. I'm an analyst here at the bank. I got with me Adam Philpott, who's CEO at Fingerprints. Hi, Adam.
Hey, Markus. Good to see you.
And good to see you, and thanks for coming here to talk to us. You've had some announcements over the past weeks.
Yep.
Q1 this morning, and then you announced a rights issue. I think it was Friday a week ago.
Yep.
Maybe we start there. It's a rights issue of up to 310 million SEK.
Yep.
What was the background of the rights issue, and what will the proceeds be used for?
Yeah, good starting question. So, I announced a transformation plan back in October. I announced a transformation plan. The driver of that transformation plan is exactly the driver of the rights issue as well, and that is that we've been in an unprofitable business that is mobile. We're getting out of that business and focusing our capital on those markets that are much more profitable. So the rights issue is all about executing that transformation plan, giving us the funding we need to focus on those profitable core markets that we're in, also allowing us to restructure the balance sheet a little bit, remove the convertible, change the debt to equity ratio in there as well. And of course, there's a bridge loan as a part of that package too, so we repay that. So that's really what we're focused on. In terms of the transformation plan, there's kind of three phases to that. This first phase is all about stability. Get rid of the piece that's creating cash burn, that's unprofitable. Focus on those pieces that are profitable. And by not being distracted by that large revenue but poor profit, we can really focus on that core business and drive even more growth than some of the growth we announced today. So that's what the stability phase is all about. It's not just about staying still and executing that core business, though. There's lots of growth opportunities within that core business. We announced some new things as a part of that, including some patent monetization, some of the work we're doing in automotive. There's a lot in there that gives us good organic expansion as well, but it's about focus on that core business, not the cash burn.
Mm-hmm. And we'll go back to the core business in just a second, but maybe we start with the mobile business, because it's still, as you say, it's the main revenue that you have, 74% of sales last year, even though it's been decreasing a lot, and you're winding it down completely. So you're getting out of the mobile business. Tell us a little bit more about the background of what triggered this, and what's the reason and why now?
Yeah, we need to run a profitable business. And for a long time, and we showed on the earnings call today how the average selling price had been decreasing for years. For 8 years, we've seen decrease in the average selling price. There was optimism before I joined that would recover. That will not recover. It's a commoditized market. It's very price sensitive. It's also subject to geopolitical challenges, and us not being, a native Chinese company, it puts us in a difficult competitive position with regards to that. So this is really a long-term issue. There's nothing that suddenly happened. We've been talking about it even publicly for a long time now, and it's got to a point where, in my opinion, we need to pivot. We need to stop spending money on something where we're giving away more money than the actual cost of capital required to fund it, and start to use those funds on these other great areas that we're already in, that we're going underserved because they're not getting the level of attention that they deserve. So this is really about getting out of something which is causing us cash burn without returns, to focus on those things that are. Gross margin has been unsustainably low for too long, and it's about our job as leaders, as executives of this business, is to run a good, profitable going concern. And with mobile in the mix, that's not been the case.
And what kind of timing are we talking about for getting out of this business?
Yeah, so we started the transformation plan, as I said, back in October, and actually we announced the transformation program, particularly the cost optimization piece, would happen in the first half of 24, calendar year 2024. That's still the case. So we will have executed the cost takeout by the end of the second quarter. We're already a long way through that. We accelerated the final phase of cost takeout that was due to take place later in Q2. We've already executed that cost takeout phase. So not only that, we originally said that we would bring the OPEX down to 180 million SEK per annum by the end of the year. We'll bring that down to 150 million SEK by the end of the year. So what you'll see is that costs start to flush out of the system. As you know, particularly as it relates to headcount, which is the biggest part of our cost base, that doesn't happen overnight. You don't just cut and everyone's gone and there's no more cost. It takes time to flush that cost out of the system with various employment regulations, etc., notice periods, those sorts of things. So we'll see that flush out of the system in the second half, but will be done by the end of the calendar year. So those are the sorts of timings you can expect from the cost reduction, from the transformation plan, and from the mobile wind down it's associated with.
Basically, what we should expect is, I would assume that there will be some. I mean, you can cut development costs straight away, and then you will have some customer relationship that you will take care of. You will have some lingering sales, but by January 1st, 2025, by the turn of the year, you should be a clean company without any sales from mobile at all.
That's right. That's right. So we're working with the unions, with our staff at the moment to manage that process. We're also working directly with our customers on inventory, but also to service their needs profitably, to make sure that we're kind of helping them as they need to make different decisions around their supplier relationships, of course. So, that's what we can expect to wind down over the second half of this year too.
And you're raising some cash. So I assume that also, and there will be some left after you've paid off the convertible and you have paid back the bridge loan, etc. You will still have some cash left, and I assume that you will put that to play in the remaining areas, and that we should expect PC access and payment to kind of accelerate.
Yes.
If we talk a little bit about those areas, PC was your largest area in last year. You grew by over 60% last year. You grew by 80% in Q1. And you're talking about having 4 out of the 5 largest PC OEMs as customers.
Yes.
But penetration is still low. And this is your most mature area. Talk a little bit about how you see the future of the segment and what's driving growth.
Yeah, so a couple of things I would say, probably 3 areas of growth if I think about short, medium and long term. In the immediate short term, the opportunity is just to continue execution, right? We see an increasing mix of biometric enabled PCs as a share of total PCs. But it's very easy to use. Security is not a feature, it's a requirement. And so we're seeing an increasing share of the overall mix there, which is driving growth. Of course, we're very successful. Our product is the best in the market, so we're very much in demand for those PC manufacturers as well, across both enterprise and consumer segments. So we see that continue to run. We see good momentum in the marketplace too. Secondly, we also, of course, are looking to penetrate all of the top 5, not just 4 of them. So that's a growth vector for us in future. It takes time. It takes a lot of testing, a lot of engagement, a lot of partnership work for that to manifest. But that's something we're, of course, active in. And then the final piece is around going beyond the existing capability. So a good example of that is we've expanded beyond just the sensor into the overall system, including the MCU. We see more opportunity to continue to grow our share of the wallet by doing things like that, but also looking at expanding into other modalities. And instead of having 1, having 2, including things like iris or potentially face, or a combination of those, because that's where we can add a greater value to the customer. We can serve different use cases. Camera-based biometrics is obviously more passive. You don't need to put your finger on anything. So there's different opportunities that arise out of that. The rise of deepfake means that iris is becoming, I think, a more important biometric modality because it's harder to fake. We don't all have images of our irises spotted all over social media. And so we see a lot of opportunity to expand within PC in that way also.
And if we move on to access is a little bit more difficult to grasp maybe. It's a bit of a different market because it's much more fragmented. We've been talking about automotive. You are in door locks, the access cards, and you just announced a deal with a 2-wheeler manufacturer in India. What are you most optimistic about in access, and what are you running after?
Yeah, great question. So, access has been a very lumpy business. because it's been very large project driven. And I've worked in a number of businesses that have what we call swing deals. You get it in, you have a great quarter, you don't get it in, you have a bad quarter. But what you tend to then do over time is you smooth out the troughs between the peaks by adding in more of a run rate engine. And I see a couple of areas that are good opportunities for us as run rate engines. One is the channel. If you look at access, very, very fragmented market. I talked about this. I think you asked a great question about this on the earnings call this morning, is that it's a very fragmented market compared to the consolidated market that is PC. And therefore, if we want to reach a lot of customers, typically you do that with a channel, unless you have an army of people, which we don't. So there's an interesting channel opportunity for us. We have a standardized product we're going to be launching. It comes with a development kit, comes with all the documentation, all the things a partner needs to be able to take that and integrate it for different customers. So I see that as an opportunity for us to spin up with our channel partners. Great monetization opportunity for them as well, and a way to reach new types of clients with biometric security. So that channel is one opportunity. The other opportunity that I spoke a lot about earlier was FIDO, logical access. We're big in physical access today. Moving to logical access, something I have with a fingerprint on it, where I can tap to authenticate when I'm in a workflow for an application, or whatever type of software access or identity access management use case those deliver against. We see a big growth in FIDO access, and again, just trying to overcome the challenges that passwords represent by moving to a much easier, more secure, and better customer experience methodology of delivering identity. So definitely see a growth area there in FIDO.
And what about access cards? Is that a big area for you?
Yeah, I mean, access cards will continue to be an area of business for us. We have some fantastic partnerships in that space. We've built a great ecosystem, and we'll continue to serve that market. I still see a long way for that market to go. I actually see quite a long runway for that market over time. One thing I talked about peaks and troughs. One of the big areas of business, probably less profitable, quite honestly, though, is the China access market. Is that ebbs and flows? There's revenue there, but I think we can be more judicious about our gross margin there. And then there's other construction, refit, corporate access, domestic access markets that we continue to work actively with our partners into. So traditional physical access absolutely remains a market that we'll continue to serve.
On cards, the last area is payments.
Yeah.
Of course, it's taken a bit longer time than at least some had hoped for, I think, for it to take off. Where do we stand now, and why do you think it's taking so long for it to take off?
Yeah, I mean, I think even like a large enterprise deal, right? These markets take time to take off. There's a lot of conservatism in financial services. Why? Because there's a lot of risk. Can't afford to get things wrong, right? And so that takes time to overcome, and it takes first movers and things like that in order to unblock and to prove out. Because once you start to do a few deals, then it's recognized that actually the risk is lower and other people are overcoming those risks. We're now seeing those early adopters overcoming those risks so that we can start to go mass market on the product as well. We've done 11 launches so far, and those are really interesting ways to test out the capability we've built, the ecosystem we've built. But not only that, how the banks go out and deploy the cards. Do people do it on the app? Do they come into the branch? What's the best approach to doing that? Then we can all learn through that as we then look to scale it up and what we say cross the chasm in terms of growth. And so I see a big opportunity still in payments. What I would say is that we have, in the past few years, focused on building out the capability, right? No one's going to use a biometric payment card if it doesn't work. No banks are going to sign up to adopting payment cards if the capability is just not there, if it's not integrated into the ecosystem, including players like MasterCard. So we spent all our effort there, rightly so, right? Otherwise, there's no deals to be done. We're in a really good place there. We're in a good place on the capability. The technology is robust. We're best in class, a leader in that space. And we've got the enrollment processes pretty well sorted. So now the focus shifts. The focus shifts to the demand side. We've built it, but it's not a case of if you build it, they will come. It's first you build it, then you go get them. And that's what we're doing now, is going to talk to banks about why they should do this, what's in it for them, how they might go about doing it. We're doing that in very close harmony with all of our partners, building out a pipeline of adopters and now driving closure of those adopters. So this, I think, these next couple of years are a really critical phase, I think, in proving out this market and starting to build momentum in this market also.
From what I understand, I think you said on the call earlier today that you have quite a good pipeline in terms of banks who's lining up.
That's right. Yeah, we do. And I mean, this is one thing I set the team to. I think partially, Markus, is I looked at the team. They've been so focused on building out the partnerships that they were kind of staying there. And what I came in to do is give them a nudge to say, okay, guys, you've done a great job doing this. Now go with those partners. It's not their job to do it. We don't just sit and wait for our orders. It's our job to go with them to those customers to stimulate demand. The more we do that, the better off the whole ecosystem thrives. And so that's really what I've asked the team to go do. They've come back to me. I was really impressed with the pipeline they came back with. My question to them in January was, show me the pipeline of banks that you've got. They came back. I was really surprised and impressed by how big it was. I was expecting it to be small and saying, right, we need to go and see these guys, those guys, but the pipeline was good. Of course, we're looking to build it, but it's not just building out the biggest possible funnel. You have to drive throughput. Otherwise, you get a funnel that's really wide at the top with nothing at the bottom. We've got to drive, it has to be funnel shaped, and we have to drive throughput, and that's what we're focused on.
So lots of stuff going on. If we try to summarize, a lot of stuff going on. You're getting out of mobile. You have a rights issue. You're driving penetration in PC, and then you have access and payments. If you try to kind of frame it, what will be your focus in the coming 6 to 12 and the coming 12 to 18 months?
Yeah, great question. So let me bring it home. It is about the context of the transformation plan. And I shared the 6 pillars of the transformation plan on the call again this morning. Let me be more specific. The key areas we're focused on. Number 1, winding down mobile as part of our portfolio refresh. So that is the first thing we're really focused on doing, winding that down graciously with our customers. That's number 1. Number 2 is about cost optimization, making sure that as we do that, we take the cost out of the business, and therefore we're focused at getting to that target OPEX to run a profitable going concern in the high margin areas we're focused on. Number 3 then is about focusing on the core business. By not being distracted by this large revenue, but with no profit, we're focused on the profitable growth areas that we're currently in, developing those, continuing to accelerate growth, but also building on those, accelerating the growth in those is a core part of that too. So those are the kind of 3 things that we're really focused on in the immediate term. That includes existing growth we're seeing today, but exponential growth across all of those areas in the future. And then where that gets us beyond that is into the second phase of our plan, which is about breakthrough growth. That's when we start to expand into some of those new areas I spoke about within the strategy into the platform. But for now, those 3 areas, a mobile wind down, the cost takeout, and then the refocus on accelerating core growth, those are the 3 areas for now.
Sounds exciting. I'm sure that we will have plenty of time to talk about modalities in the future.
Love to.
But there's lots of things going on. Thank you very much for coming here to talk to us, and speak to you soon.
Awesome. Great to see you, Markus. Thank you.
Thank you.